Welcome everyone. It is a sunny day here in Melbourne. It is every accountant's favourite day of the year, the end of financial year. Those of you that couldn't care less, like me, just another day. Those of you that love crunching the numbers and or are looking for a mid-year reason to celebrate a new year, much like we do at the end of every calendar year. It is 30 June, end of financial year. Tomorrow will be the 1st of July, which is financial year 2022. All right, we've got some of that boring stuff away. As always, most of you that are live here on Zoom will know that I'm just trying to kill time while we get live on Facebook, which hopefully will be there very soon. So action-packed session we've got coming to you today. A lot of things we want to run through. So we're going to try and be quick. As always, I'll try to get to everyone's questions. If I don't, we can hang around at the end and try and answer those for you. Just first of all, a couple of quick shout outs. I know there was a few people that have been joining us over the last few weeks and saying you never call out to me. So Rachel, welcome. Thank you for joining us for the first time last week. I loved your feedback at how good it was. And also Jane, thank you very much for telling me how good my daughter was last week. She loved the fact that she was on something and doing public speaking with no one in the room, but all of you online. So great to get that feedback. All right, let's get stuck into today's session. And surprise, surprise, my clicker's not working. So I'm going to have to. All right, so what have we got for this week's themes? We've got a lot. Let's see if I can move through them. Great. All right, deposit hurdle for first home buyers. Obviously, as prices go up, one of the negatives is you need a bigger deposit. So that will be interesting as to how that plays out. 9 out of 10 Australians have sold for a profit. More than 90%. That's fantastic. That is why people love owning real estate. You won't hear those kind of results in the share market. Inflation. Is the RBA going to need to increase interest rates earlier than they thought? Maybe, maybe not. Pet proofing your property. Can you actually say no to pets anymore? Let's find out more about that. And lastly, rental costs are eating into people's income. So, how much is it actually costing them to rent a home versus other alternatives of potentially having a home that you might own. So before we get into that, of course, let's finish off this year's auction stats. Fantastic result nationwide. You can see big numbers here again. Despite the fact that Sydney has now gone into its own 2-week lockdown, still a big weekend there. Both Sydney and Melbourne were back to having Super Saturdays. Melbourne, I believe that was the second busiest week this year. So it really just shows, despite it's slowing down for those couple of weeks during our most recent lockdown and just after, it's bounced back big and strong, and the clearance rate very strong. Sydney, again, surprisingly over 80%. Nothing is holding back that market. Some of the stats there that you don't see in here was that I believe about 45% of those sales all happened pre-auction. So obviously, as people were rushing to get in with the impending lockdown coming to get those done, so they didn't have to do a Zoom auction. As always, not much else I can say. Great result, and we expect this to continue throughout the rest of this year. All right, let's have a look at our favourite leading indicators. This is from realestate.com and what they're seeing on their real estate listings websites. So, certain actions that you or other people out there might take, like clicking on the button to contact the agent, downloading floor plans, putting in inquiries, that moves you up as to what they believe is an engaged buyer. Sure, there's some tire kickers out there, but generally this gives an insight into what we can expect over the next month, 2 months, 3 months, 6 months. Auction results, as always, are looking back. They're historical and great for a point in time. But for most of us out there, we want to know what is going to happen in the future. So let's have a look. If we drill into it here, you can see, again, this is the national forward-looking buyer demand. It's remained pretty steady and flat over the year. Obviously, a bit of an uptick happened in the last couple of weeks. So I think, we can expect to continue to see strong demand. I've been mentioning it most sessions that probably the most interesting thing is you can see the spread now happening between the red line, which is apartments, and the blue line, which is homes, or freestanding houses, should I say. So typically, you can look back historically, you can see both of those have pretty much tracked each other. Obviously, apartments is starting to now track substantially ahead of freestanding houses. Now, I think the only reason primarily we expect to, or we are seeing that happen, is that as prices go up, it becomes unaffordable for people to own a freestanding home, so they start looking at apartments. So those of you that have been studying the historical stats will know that there's no doubt that freestanding house prices have increased significantly more than attached homes or units or apartments, however you prefer to describe them. But I think what we're seeing here is that we should expect that trend to start to reverse over the next 6, 12, 18 months as more and more people start looking towards apartments again as a more affordable or attainable option. Let's drill in and have a look at what we're seeing in our local Victorian market. It's tracked pretty similar to the national. Obviously, we've had a few more dips. We've had more lockdowns than the rest of the country. And obviously, we're seeing a bit more of a surge in the last couple of weeks, which is primarily driven by the fact we had that dip and then people rethinking about what they want to do with their homes and where they want to be. Investors in the house, let's have a look at the same stats we see for rental. What do we see nationally? Look, I've been saying this all year. I really don't know how to read this graph. We're in an interesting time, notwithstanding just the pandemic, I guess, that's still running rampant around the world. But just in terms of where things are sitting, it's very hard to read into this. I think there's pockets of the country that are going gangbusters, and there's other pockets that are, not doing so well. The biggest rental markets around the country are always in those inner city areas. So that's pretty much what's driving most of the market, and that's where I think we say on the stats there's probably more than 80% of the rental properties are in the capital city, inner city markets. And they're obviously a little bit patchy given that for most states, big events are non-existent. Hospitality employment is down significantly with the constant lockdowns and shutdowns. And obviously the one we always talk about, students there. So very hard to read this graph. You'll see pretty much the same coming through here in Victoria. Perhaps a little bit more choppy and some highlighted or elevated demand over the last month or so. I think, as always, I say to you, if you've got the right property in the right market and you really stick about the rents you're doing and setting what is the market rents, you shouldn't have too much of an issue renting that. Obviously, if you're in a mining town and the mines have stopped or everything's gone, not much you can really do there. If there is no demand, there's no demand. All right, so my favourite question to ask all of you on the line today, those of you that is your first time, I'm really focused on you because most of you who've been joining us for the last 12 months will know the answer to this. I want to know from all of you out there, what is more important? Is it information or knowledge? So just, take a couple of seconds to think about that. Information or knowledge? What is it that is more important? Facebook helper, have you got the answer? No, she doesn't know. All right, so the answer is knowledge. Now, why do we say that? Well, if I just unpack that, information is organised data about something, whereas knowledge is an understanding either through experience or education. So, knowledge in itself is being able to take on board that information, understand it, and relate that as to how it may impact you. And, that's what we call actionable knowledge. So today's session is all about giving you that knowledge, through both our education and our experience, that we've all been doing this for more than a number of decades individually, and collectively, we've passed the ton in terms of years of experience. So, what we're hoping to give you today is that knowledge, answer your questions, and, what we then expect you to be able to do from that is to create your own database of actionable knowledge. What does that mean for you and where you are in your home ownership or home buying or home selling, wherever you are in that home ownership curve? What does it mean for you? What should you be doing? What are the triggers you're looking for? And then those actions that you should be taking when you see those triggers happen in the market. So that's what it's all about. And that's what's really important. And I think a lot of people, don't understand this concept and they skip over this, they miss it, that it isn't just about waiting until you read about things in the paper and often it happening too far in the past. It's, understanding those leading indicators, like we just had a look at with those stats on the earlier slides. What do they mean for you and being able to see the patterns and take that action before everyone else does? It's easy to be a sheep and just follow what everyone else is doing. But often by the time you do, it's too late. You need to be able to understand what does it mean for you and when is the right time for you to take those particular actions. All right, I've been chastising everyone now for probably 7 or 8 minutes. So who am I? I don't think I introduced myself at the start, so I apologise for that. My name is James Maitland. I'm the General Manager here at Salvo, and I've been doing this for more than 20 years, and I've helped people create more than 11,500 homes over the last 2 decades. Wherever it is in your home ownership journey, Salvo, we do a lot of things, but ultimately our number one goal and our primary focus across all of our businesses is helping people create homes. So it doesn't matter whether you're looking to buy your first home, you're upgrading, you're a downsizer, you're an investor, even if you're just looking to move out of mum and dad's home for the first time and rent your first property, we're all about helping you create that home wherever you are. And that's what we love doing. And that's what we hope to add value to everyone, wherever they are on that journey. So who are we joined with today on the panel that'll be answering all of your questions? Favourite eldest statement of the company, Greg Arbeck, Jack Gian, and Lucas Karras. These guys have got a wealth of experience and knowledge. So hit them with as many questions as you can. I've already seen a number of questions coming up in the Q&A. So that's really exciting and looking forward to getting into that in a moment. If you haven't done this before or you're following us on Facebook, unfortunately, there's nothing we can do in terms of answering your questions live. Feel free to put them in the comments. We will check over them and come back to you. Obviously, if you want to get involved, then please do sign up, follow one of those links and join us on Zoom. That is the only way we can keep on top of all your questions and answer them live for you. Those of you that are lucky enough to be on Zoom, the way to get involved is, as you've been doing, put your questions in the Q&A. Alternatively, if you're feeling brave, you want to get involved, you want to show your face, let us hear your voice, you can raise your hand and we will unmute you and let you come on to the virtual stage and ask the panel your questions. So that's it. Let's get stuck into it. I've been going on for a while. Now, to start off with, I'm seeing a lot of questions here. I've got another screen over to my left. I'm sort of just trying to read through. So first up, we mentioned it before that, rents are going up and up and up around certain parts of the country. We talk a lot about home ownership as well and how much you should be spending. Can someone give some stats in terms of, how much income people are spending on rents and where that's trending?
Sure, James. Look, out of 2,809 housing markets assessed, 51% required families to spend more than 30% of their income for rent, and 164 suburbs requiring more than 50% of their income.
So, without drilling in too deep, I guess if you're in one of those suburbs there, you're potentially going to be seeing strong rental growth and very, very low vacancy. Does that mean that we're just going to get a ton of new supply coming on in those markets and that will level it out? Or what do you expect is going to happen from that?
Look, unfortunately, the developers cannot build fast enough to meet the demand. So the supply will continue to shrink.
Okay, so surprisingly enough, it's impossible for us to build a new home in about 30 days, isn't it?
Exactly.
Despite, I know, those of you that know our company well will know we have the self-professed smartest man in the entire world called the Big Mac. But even he, with his great skills, cannot build a new home in 30 days. So, Lucas, tell me, we've copped quite a bit of flack over, the last few months from people saying, oh yeah, I've got an inner city apartment in Sydney CBD or Melbourne CBD or Brisbane CBD, and I've been struggling. My rents have been getting smashed. I've had, long vacancies. How do you overlay that with what we're seeing in some of these suburbs then in strong demand? Is it going to change or why is that occurring in such a manner?
Look, I mean, of course it's going to change, James. You know, like you mentioned earlier, we had lockdowns. We've got their borders. All the students are unable to return back to the country. And they're the sort of people that mainly, you know, your restaurant workers, they're the sort of people that rent and live in the CBD. So we have seen sort of vacancies in the CBD. But I have to mention that since last year, same time last year till today, the vacancies in the CBD have dropped by 30%. So we are seeing in large numbers that things are starting to turn. And wait till you see what's going to happen once international borders open as well.
Yeah, I mean, I think it's probably one of those things as well. You know, would it not be fair to say that you know, much like people looking to buy homes and so forth, that if they're in these areas where rents are going up and up and up, and there's very little vacancy, that potentially they're going to start looking at more affordable alternatives as well, whether that be buying a home or potentially looking to rent in some of these suburbs that do have great deals still available.
Exactly, 100%.
All right, I've got a question here from Craig. I'm just trying to read through. Maybe I'll look on the big screen. Yeah, okay. So I've seen this happen a few times from people, you know, talking about people making profits from selling real estate and what are the actual stats out there. Has someone got a bit of an overview as to, you know, the latest stats perhaps in terms of profit-making sales, loss-making sales, and some kind of quantum to put in perspective for people?
Yeah, look.
Oh, you again.
Surprise. Look, I can tell you that 9 out of 10 homes sold for a profit in 2021. You know, loss-making sales fell by 16.5% in the March quarter. That is fewer than 1 in 10 homes sold at a loss.
Okay. I want to ask a few more questions, but I've just seen an interesting question here from Johnny pop up. He's asking about interest rates and where we think they're going to go. But I think really what he's trying to get at is, you know, perhaps he's read our newsletter. I'm sure you have, Johnny, and I think I know where you're going. So let me paraphrase this to one of you guys. You know, we often hear about retirees or what we call net savers, i.e. they have no debt, just cash savings. And they're pretty much the only group that tends to get upset when interest rates go down. But we're starting to hear there's another group of people that perhaps it's having an adverse effect on. Can someone sort of explain, you know, why lower interest rates, you know, may not be seen as favourably by some buying groups out there?
Yeah, James. One of the buying groups that do suffer somewhat are the first homeowners. So on the one hand, we're getting that housing affordability in terms of repayments is less, but as a result of the low interest rates, there's a double-edged sword that house pricing has increased. So it becomes much harder. People have to save more and longer to try and get into the market. So it's almost a double-edged sword. So it's more the first people.
So it becomes the haves and the have-nots. You know, those of us that have got a home love it when prices go up. Those that don't, perhaps are finding it harder and harder to get that deposit saved up. Is that sort of fair to say that perhaps?
So, yeah, everybody's going, it's the best time to buy a house. The interest rates are so low, you should get in. But the double-edged sword is that the pricing, this is one of the contributors towards pushing the prices, which is making it harder for younger people and first people buying a home to get into that market because of that.
All right. Lucas, I think this is for you. Jenny's asking a question just on what we're talking before. You know, we put it in terms of dollars as to how much profits people have made this year on their real estate sales. Do you have those figures?
Glad you asked. I sure do. So vendors have made
Should we say, is it like this, or like this?
More like this. So vendors have made more than 30.6 billion. That's with a B, billion dollars in profit.
That's more than the GDP of Zamunda. So
I'll have to agree with you.
You know, we see those kind of big profits there. Why? I think you were saying that it was, 90% of people this year have made profit on their sales. Why are people that are selling actually not making a profit then? I mean, $30 billion is a truckload of money to be making. Why aren't we seeing everyone making profits? What are some of the reasons that might lead to people actually selling at a loss?
Look, James, I mean, obviously there's a golden rule of a location. So, if you don't buy in the right location, buying the wrong property for the location you're in, some people overcapitalize, so they'll buy a house and they'd spend a ton of money, and they're never going to get it back in that location. So look, it gets down to location. And obviously, even the industry we're in with apartments, you got a developer selling a brand new 2-bedroom apartment for 800,000 and one for 500,000 in the same street. So at the end of the day, you got to buy the right property at the right location for the right price. And be careful, like we talked a little bit last week, don't overcapitalize when you're doing renovations.
All right. And how does someone make sure that they buy the right property?
Buy from Sellable Property Group.
And of course, call 0409 Lucas Harris.
From me, exactly.
I could see Greg madly waving his hands in the background there. Okay, so a couple of questions just while Lucas was talking were popping up. I think this is back to you, Greg. What are some of the options then for people if, perhaps people have been following the right advice, they've been putting away money, saving up over the last 4, 5, 6, 7, 8 years to get their first deposit, and now all of a sudden seeing this surge in house prices getting further and further away. What are some tips or options that people have got they could potentially explore to try and fast track that and make it able that they can get into the market today?
Yeah, the thing is that they could talk to their parents or buy in partnership with someone or something like that, those type of things. But crucial to all of that is don't compromise on the location. We keep on talking about location. And that's something that we've been driving in over all this time, is rather look at something smaller and more affordable, but in the right location, i.e. a unit or an apartment. And that should at least get a foothold into the market. So those are some of the options that they can look at.
Okay. So, I think that ties in with what Lucas was saying, that perhaps some of those loss-making sales are where people, through desperation, perhaps went to an area that they didn't actually turned out they didn't like, or they overpaid, or they were just desperate to get in.
And then when they try and resell, they end up making a loss. So it's definitely better to buy in the right location, even if it's a smaller property.
So like I always say to my girls, patience is a virtue. Don't wait too long, but be patient, find the right place, focus on the location. As Greg said, there's only 3 rules in real estate: location. And that's the number 1, 2, and 3 rule. There's nothing else that matters than getting the right spot. So don't compromise on that. And as Greg said, potentially look at a starter home that it may not be your forever home. You don't have to buy your forever home as your first home. You just need to get a foothold in the market and an area that you love. And there's the great underlying demand and all of the economic and demographic factors that make a location great. All right, let's change a bit of pace here for a moment. I am crying and I'm upset, and not because something bad happened to me, because I am dead broke this week. And the reason for that is that one of my daughter's rabbits that did run around, for those of you that tuned in earlier in the year when we were stuck at home, was running around my feet and causing trouble. I got sick on the weekend, and about $3,500 later, and little mini controls and drips on this tiny little rabbit. It's now back home, resting, looking very fat and happy after it's bled me dry. So pets, I think it would be clear, and you'd be having to have lived under a rock if you didn't realize that during the pandemic and all of these lockdowns that people like me caved into my girls wanting an animal. Even single people, when they couldn't go and visit their friends during the lockdown here in Melbourne, got a pet as a companion. So it leads us to that question. if you're a landlord and you're looking to rent out your apartment, do you actually have a say anymore as to whether pets are allowed or not?
Now, as a landlord, currently the new legislation say you cannot say no to the pets.
So what about, Jack? Can I bring my pet crocodile then into my one-bedroom apartment?
Yes, if you can.
I'll just make sure that it greets my next door neighbor so he can wrestle it for me at night.
Yeah.
So, with that in mind, I think it's definitely been an education process for us with a lot of our landlords. Particularly, we've got a lot of landlords that perhaps don't live in Australia, and obviously laws are very different in different parts of the world, that you basically don't have a choice anymore. I think you need to go to your local residential tribunal to get an order to allow you to not have a tenant have a pet in there. So effectively it works in the opposite to how it used to be. So I guess that begs the question, Jack, if you're a landlord, should you actually be proactively, putting it out there that you will accept pets, or that you're, a pet-friendly landlord, a pet-friendly apartment?
Yeah, I think 100%. Our recommendation is make your investment property as your landlord as the pet-proofing property. So make your property like a pet-friendly, which is open up to more people who with the pets. And potentially you could really get a great rental income, because at this stage, like James, you said, perhaps because the lockdown, lots of the people, they're looking for the rental property with the pets, with the small dog, puppy, and the cats. So if you open up to those people who has the pets, your property has to be very popular, and you might be asking a little bit more rental income.
Okay, so I've no doubt that I think I've seen a few questions, or perhaps there were more comments come through, and I'm sure pretty much everyone on today's call and almost everyone around Australia would have a friend or a friend of a friend or a relative or someone who can give you a horror story about someone having a pet, a dog that potentially ate the door, animals that went to the toilet all over their carpet and so forth. There's plenty of horror stories, but we haven't necessarily experienced that, here with our rental agency business ourselves. And perhaps, Jack, it's even, we're finding some of those people are better tenants. Why is that?
Yes, I think so. I think from our experience, because we had lots of property and been renting to the people, some of the very, very good tenants from us actually is those people who stay with the pets. Because I think the reason behind is those people, they have the pets, they have the small dog, cats, make them more careful on the property than those people who hasn't got any pets. So yeah, so it's very likely, we say, if people, they bring a pets with them to stay, most likely they will more even a better tenant.
Yeah.
And they came to stay for a longer period.
Yeah, good. Benny's made a good point here. So Benny, thanks for your contribution. And he mentioned you can also take out landlord's insurance that helps cover against damage caused by tenants and their pets. So those of you that are Salvo real estate customers will know that we're constantly recommending to everyone out there that they have landlord insurance, not only for accidental damage. As Jack said, whilst the vast majority, if not, almost all of pet owners tend to be very careful and perhaps can be better tenants, there is always a few bad apples, and you'll get them. And that's one of the reasons why, as Benny's pointed out in the Q&A, it's a great idea to have landlord insurance. It helps cover some of that accidental damage, as well as those of you that did have a property in a city area or pretty much anywhere in the last 2 years will know that it was a huge benefit having landlord's insurance, particularly when tenants left, midway through, when they lost their jobs and couldn't afford it anymore, that you had that security of cover. So I think that's a big thing, Jack, that you weigh up all the positives of being pet friendly and the fact that the negatives you can potentially de-risk by having insurance. I think, you'd be crazy not to make your home pet friendly, wouldn't you?
Yes, that's 100% right. Very good suggestion, James.
All right. And is there any other things that people can perhaps do to make sure that, their homes are pet friendly?
I think as an investment property, I think a landlord, they probably, for example, the carpet and the wallpaper maybe not ideal for the pet friendly house. Maybe the floor tile, some good quality furnishing, and which is not easy to be scratching by the dog, by the cat. That's kind of the property. If you can make your property as like that, it will be much more easier to be maintained and to be prevent to damaged by the cats, by the pets.
All right, good advice. All right, obviously anyone out there that's got an investment property and looking for some advice, or perhaps looking to mix it up, feel free to reach out to any of us. We'd love to help you. And obviously if you are based here in, or your property's based here in Melbourne, we'd love to look after it and help you out. We're really keen to add as much value and make as much impact as we can to everyone here. So look, it's top of the hour, but there is one important topic that I wanted to discuss. No one's really asked any questions about it, but I know it's something that people are always sort of thinking about, and that's of course interest rates. Greg showed us that there's also a bad side to low interest rates, but I think for the vast majority of us, we love low interest rates. Credit card debts or credit card interest rates don't move; they just tend to go up all the time. But for everyone who's got a home loan or an investment loan or whatever it is, it's great to have low interest rates. But how long are they going to last? That's the question that we tend to get asked time and time again as we speak to more and more people. So for those of you that don't understand, it is the Reserve Bank that sets the official cash rate, and that is the rate that then the banks sort of use to peg as to what they make their interest rates to you as a borrower. Now, the Reserve Bank has basically one goal and is mandated to do one thing. And Lucas, what is it?
Sorry, I couldn't get the
All right.
mute off.
No worries, Greg, you tell us.
Yeah, to make sure that they've got to just keep the inflation level at between 2% and 3%. That's their cry, to make sure the economy grows. That's what they have to. Yeah.
So for everyone out there, inflation is simple. It's prices going up, and deflation or low inflation is when prices aren't growing or they're starting to go down. So with that in mind, Greg, where is the stated policy of the Reserve Bank when they're going to increase interest rates?
Well, they've got to try and keep it between 2% and 3%. So, if things start screaming way above that, but on a consistent basis, that's very important to look at it on that. We might get peaks and spikes at certain times, but the Reserve Bank won't do anything. They've already talked about holding the interest rates until 2024. And as long as if they see consistent inflation above their limits, maybe they'll look at increasing stuff at that stage.
Okay. And what's the general views from the big banks and the big economists out there? I know that they're quite wide-ranging and split. What's the general thought from most people out there?
General consensus is that it's not going to go up. Some of the banks are saying maybe a small percentage at the end of next year, maybe, and we're still talking 0.25 points or 2%. It's very, very minimal. So the general consensus as a rule is the interest rates are not going to go up dramatically, and they're going to be on hold until 2024 at least.
All right. So everyone out there that's worried, our rate's going to suddenly skyrocket, it doesn't look like it. The general consensus, while, we've never met an economist that doesn't change their view overnight. I think the general consensus, if you look at the economy, you look where we're positioned, and you look at the fact, as Greg said, that the Reserve Bank has been clear that they're looking for consistent and persistent inflation in that band range. So sure, there's going to be spikes, but they want to see it consistently sitting in that range. I think we've got a good number of years still to go of these low interest rates, which means prices are going to continue to go up. So those of you that are sitting on the sideline and waiting for a dip, stop it. Don't do it anymore. Take action and do it now while you still can. Get in before the prices keep going up, and so that you can enjoy those low interest rates. That's one of the greatest things here. Greg can tell you about 25, 30 years ago, when interest rates in Australia on home loans were 16, 17, 18%. You know, I can talk to you about 20 years ago when I was paying 8 or 9%, and that was a low interest rate. Today, you know, if I ask, you know, some of the other people in the office that are probably, you'd be surprised that anyone could be younger than me, but they are a fair bit younger than me. And, you know, they're talking about high interest rates were back when they were 4 and 5%. Right now, when you're getting for 2%, you want to make the most of it because we may not see them at this rate ever again. So you want to be able to tell your kids and your kids' kids and everyone there that you got the benefit of 2% interest rates. So stop thinking about it and get involved and get in there and buy the new home you're looking for. All right, we're well past the top of the hour, so let's leave it there. I can see no one had any questions about the end of financial year, so it looks like everyone out there is just as bored as we are about it. It is important. There's a number of things you should do. So feel free to pepper your accountant now in the few hours that are left. Of course, a lot of things can be done post-financial year. It's just in terms of how you decide to potentially set yourself up now. So I want to make a few closing comments. Obviously, we had another bumper session today. A lot of information, a lot of impact there, and hopefully we've helped you create that actionable knowledge database for yourself. So, you know, I went through what that means. So, you know, the way that I see it from everyone here, you know, what's the next steps? How do you move forward from here? Well, for most people, I'll tell you what you're going to do. You're going to do nothing. You're going to say, I'm busy. I didn't like that guy's haircut. I didn't like what they said. I've got other stuff to do. You know, he's dyed his hair too dark a color of brown. Whatever it is out there, I just say this to you. If you don't make a change, don't expect a different result, you know. Now, if you've got 10, 20, 30 homes and you're loving it and you're doing great, then that's fantastic. But, you know, if you're looking to change it, you're looking to buy something, you're looking to upgrade, you're looking to move forward, you need to make a change. So at a bare minimum, what I want you to do is take on board what we've discussed today. You know, watch the replay when we post it, grab some of those tips that the guys gave you, understand what some of those things out there mean for you, and take that on board. We've shown you how to do it. We've given you the framework, and get out there and do it yourself. But what I really, really hope that you do, and what I'm telling you is the best next logical step, and it is the minimal investment that you can make and actually expect to get results, is to let us help you. Now, you know, that doesn't mean that you've got to give us everything. All I'm saying that I want you to do is set aside 15 or 20 minutes in the next 5 days, book one of these appointments that I've made available on everyone's calendar, and let's have a chat. You know, it's 15 or 20 minutes. Everyone can find that in your time, you know. Pop in your earpiece when you walk to your local coffee shop and have a chat with us. We'd love to see you face-to-face if you live close by. You want to see us when we're chatting, jump on Zoom. Whatever it is, we will make it happen. And I believe this is the smallest investment that you can do and still expect to get realistic results. You know, the very successful people, they don't look to do everything themselves. They look to find someone that can shorten that time frame and get them to their goal quicker. And that's hopefully what we can do for you. So, you know, what's this involve? It's easy. As I said, it's about 15 minutes. We'll have a quick chat. You'll ask us some more questions about the market, perhaps some questions you weren't brave enough to ask us today, and you're happy to chat through in a one-on-one environment. Perhaps you want to get a bit more focused on some areas. You know, we'd love to understand where you are right now, what you've been trying to do, what you have done, what you haven't done, and where you'd like to be. And then ultimately from that, we can sort of assess it and work out, are you a good fit for us? Now, you know, I'd love to say that we can help everyone, but the reality is, you know, we're not going to be a good fit for everyone. But let me just say this to you. If you're here in today's session, you're still listening to us talk, you got value out of today, then you will be a good fit for us. You know, people say, yeah, but what about this? What about that? Well, let me say this. You've got to be prepared to take action. You know, you've got to understand the concept, as I said, about actionable knowledge, and you actually got to be able to want to move forward and do that. You know, you've got to be hungry. You've got to be prepared to actually roll up your sleeves, you know, not only to take action, but do the hard work. Now, when I say by hard work, actually open up, be honest, tell us where you're at so that we can actually help you. You know, we'll do all the heavy lifting for you, but we need you to actually be open with us and not say, oh, yeah, no, look, I brought 5 homes when you've actually brought nothing. Or, my budget's this when you don't have that budget. So I really, really recommend, if you want to make progress and you want to move forward, this is the next best step for you. All right, so how do you do it? You're obviously excited and you want to do it. There's 3 simple ways. The first one is jump over to the chat and click on that link and book your session straight away. I'm pretty sure that's how most of you have been doing it, because I've seen quite a few notifications pop up. The second option is your web browser, when you logged into Zoom, should have redirected to the booking page. Jump on, it's easy, it's a calendar, it's interactive, put your details in, select your favorite time. Lastly, for those of you that have got to run off now, perhaps you don't have your calendar, you're not sure, you want to procrastinate even more, don't wait too long, because these do fill it up quickly. We'll send you an email after today's session. It'll have the link. You can sit down, look at your calendar, find your time and do it. But all I say to you is don't stop and think and think and think. Do it. Take this next step. It's not a big commitment. It's 15 to 20 minutes of your time. Take the step, do it, and move forward. So that's it. We've gone a fair bit over time. I apologize to that for doing that. For those of you that have stuck around, I really, really appreciate you hanging around till the end. I know there is a lot of things that everyone could be doing out there, particularly those of you that I made the joke again that are excited about end of financial year. I saw a few people drop off when I mentioned call your accountant, so maybe that's where they went. But look, we had a great time doing today's session. There's a ton of great information that we shared. And, I really, really hope that you got value from that. And I hope that you join us again. So remember, we do this every Wednesday, 2:30, rain, hail or shine. We're here. So whether you come next week, next month, next quarter, or even next year, we'd love to see you back. Every week is different and fresh. We talk about what is happening for the week, as well as any questions you've got. So, get involved and you'll get the most out of today's session. So guys, thanks for sticking around and all your great input. And once again, to everyone on the line, thank you very much for joining us and look forward to seeing you again.